India's economy has sprung a surprise in the first quarter of financial year 2026. Fresh estimates show that country's GDP grew by 7.8% in Q1 FY26. Now, that's a sharp rise compared to 6.5% growth in the same quarter last year. The strong momentum has largely been driven by services sector, which continue to power India's growth story. And the latest GDP data shows that India's economy started financial year 25-26 on a strong note, with overall GDP growth ahead of expectations despite global headwinds. Now, India's economy, as I mentioned, grew at 7.8% in the first quarter of financial year 25-26, as per data released by Ministry of Statistics and Program Implementation. Amid all the global headwinds and negative news, India's first quarter GDP coming at a strong 7.8%. And this news comes on the back of the 50% tariff announced by US President Donald Trump, none of which has any bearing on the first quarter data. But this is a positive surprise as far as India's first quarter growth is concerned. This is higher than the 6.5% growth which was recorded in same quarter last year. The strong performance, in fact, we're given to understand, has been led by services sector, which supported the overall GVA growth of 7.6% from April to June quarter. Now, as far as the real GDP at constant prices in Q1 for financial year 26 is concerned, it's estimated at 47.89 lakh crore rupees compared to 44.42 lakh crore rupees in first quarter of financial year 25, showing a growth of 7.8%. Nominal GDP at current prices stood at 86.05 lakh crore rupees, higher than 79 lakh crore rupees in same quarter last year. Now, as far as sectoral growth is concerned, agriculture and allied activities grew by 3.7% in real terms, which is better than 1.5% growth, which was seen in same quarter, in fact, last year. Secondary sector showed strong growth, with manufacturing also expanding by 7.7%, construction by 7.6%, mining and quarrying contracted by 3.1%, while electricity, gas, water supply, other utility services also grew by 0.5%. And the services sector, the tertiary sector, has shown the strongest growth at 9.3% in Q1 FY26. This is a sharp rise compared to 6.8% growth, which was recorded in same period last year. So services sector there leading the growth for India in first quarter of financial year 26. Let's also now quickly talk about expenditure. As per data made available by MOSPI, government final consumption expenditure has seen a sharp recovery, growing by 9.7% in nominal terms compared with 4% growth in financial year 25 first quarter. Private final consumption expenditure, which is measured of household spending, grew by at least 7% in real terms, which was slower than 8.3%. So just to put it in context, government final consumption expenditure, so the government expenditure has grown in first quarter, but private consumption, which is household spending, has gone down. It's lower compared to first quarter of financial year 25. My colleague Kabir joining us from the newsroom. Kabir, good numbers there for first quarter of financial year 26, despite all the strong headwinds we are seeing in the past week or two.
No, you're absolutely right, and this comes, right on the heels of what major financial institutions across the world have also said about India being that robust economy that is going to be able to tackle these terrifying times that we live in. The super, healthy GDP growth print, those are the headlines that I'm reading as of now. And, you rightly pointed out as well, the real GVA in quarter one of this financial year has beaten where we stood, in the last financial year. It is estimated at 44.64 lakh crore rupees. This is against the 41.47 lakh crore rupees that was, the GVA in the same quarter last year. And if one could really understand the numbers, if I could read this out, government financial consumption expenditure that you just pointed out as well, it has bounced back. Those are super healthy numbers. It has registered a 9.7% growth rate in nominal terms. This is during quarter one of the current financial year, that's 25 2025-2026 over the growth rate of 4.0% in Q1 of financial year 2024-2025. So last year it was 4.0%, but right now the government final consumption expenditure bouncing back superiorly at 9.7%. And this also accounts for real private final consumption expenditure that has reported a 7% growth during the same Q1 of 25-26. This is as compared to 8.3 in the same quarter last year. So not just government's final consumption, but private consumption as well. We're seeing a little bit of uptick over there. 4% when it came to government consumption, we're looking at almost 9.7% right now, and 7% when earlier it was 8.3. So this particular aspect showing us a little bit of decline, but the gross fixed capital, Shweta, the GFCF has recorded 7.8% growth at constant prices over the growth rate of 6.7% in Q1 of financial year 2024-2025. So definitely great numbers that we're looking at. The Prime Minister, he's visiting some real stalwart capitals across the country for this global realignments that we're looking at. The German embassy is holding special, sessions so as to tell our students that the United States is not the only place to go at. So global realignment, and the Ernst & Young report that came out yesterday was again a red letter day for the Indian economy. So it seems bright as of now. The government, consumption seeing that massive uptake from 4% to 9.7 now.
All right, and if we were to look at the expenditure approach to GDP, their numbers are looking very good. So just to break it down for our viewers, Kabir, continue to stay with us. GDP essentially is GFCE, which is the government spending on goods and services, plus the GFCF, which is gross capital fixed formation, plus the private spending by individuals. Add to that net exports, which is exports minus imports. Now, all of that looking very good right now as far as first quarter is concerned. I think the only thing that is not done too well is private final consumption. So consumption by people continues to be a problem. Household consumption has been a tad bit slower from 8.3% growth seen in same quarter previous year to 7%. So I think that's where the bummer is. But overall numbers are looking extremely healthy there. And this comes, as I said, it's a fillip to the government, which has been, onboarding government's data, the growth story, and that data, that number there suggesting that, in fact, the Indian economy is doing extremely well. Now, this comes, as Kabir, you rightly pointed out, on the back of, S&P upgrading India's sovereign bond rating, EY suggesting that India would be the second largest economy by 2038. GDP numbers looking extremely healthy for first quarter of financial year 26. This month, remember, is gone by. This quarter has already gone by. So we'll have to wait and watch what sort of impact Trump tariffs will have on the current quarter. But India there is preparing itself, Kabir. As you pointed out, we are trying to realign the global order. Prime Minister is in Tokyo. Later is going to be in Japan. We are trying to ensure that there are more partners India has in Indo-Pacific area, where India wants to have more ties and, greater ties with countries that it can potentially supply some of its goods and merchandise to.
Absolutely. The Prime Minister just a short while ago, sharing the stage with, his Japanese counterpart, he's clearly said Japanese tech and Indian skill and talented labor, it seems to be like a lethal combination. And that's why India is that market, not just for the labor that we provide and the skilled technicians that we provide, but also for our own commodities and product. India is already diversifying its outreach, amidst these Donald Trump tariffs. And we've already made a particular list of 40, different odd countries that we're now going to, approach and diversify our exports. And India is that robust economy that everybody wants a piece of. Our global heft, people can't stop talking about it. So Japan, next up China on that particular list. We'll have to see how that really fares out. But interesting developments in India's economy, certainly telling and turning heads in the Republican administration in the White House.
If anything, I think it's a loss for the US to not have a piece of the pie there. Kabir, thank you very much for joining in for all those details.